When you first start out on your trading journey, it can seem like a confusing and certainly a daunting task. This video will show you, as a complete beginner, how to understand the basics of candlestick charts. I'll explain it in a simple manner, in a way that I wish someone had explained it to me when I first got started. In future videos, I'll take you through everything you need to be a successful trader. If you're anything like me, then this is what you thought trading was. Confusing charts with indecipherable lines and strange indicators that didn't seem to make any sense. It was the land of bankers in front of rows of monitors and ulcer medication tucked into their shirt pockets. But that's not the case at all. By the end of this video, you'll be able to understand the basics of a chart and candlesticks. If we strip away all of the indicators from this chart, what we're left with is this. I took this from a 5-minute forex chart. What you're looking at now is the raw data, what would be called naked price action. This is the most important information for any trader. It tells you exactly what the price is doing at any given period. Any of the indicators you may see overlaid on the screen, they all take the information from the raw data of the price action. As you can see, the chart is made up of lots of individual candlesticks. Candles tend to be either bullish or bearish. So on the left here, we have a green candle, which represents a bullish candle. Bullish simply means that the price increased over the time period. On the right, the red candle is bearish, which simply means that the price decreased over the period. When I'm talking about periods, what I mean is that each fully formed candle represents the price action over a specific time period. So, if you're looking at a 5-minute chart, then each fully formed candle represents 5 minutes worth of price action. An hourly chart means each fully formed candle represents an hour's worth of price action. A daily chart, each candle represents a day, and so on. Within the candles themselves, we can garner more information. The fat rectangular part of any candle is known as the real body. What the real body shows us is the specific price action relating to the opening and the closing price. So for the bullish candle, the bottom of the candle body shows the opening price, and the top of the candle body shows the closing price. Bearish candles are reversed, so the top of the body is the opening price and the bottom of the body is the closing price, since a bearish candle is displaying a price decrease. What you're going to see on charts more often than simply candles with real bodies are candles like this, with vertical lines stretching from both ends of the real body. Each of these candles is the same, as in the green candle still shows a price increase and the red candle a price decrease over the time period. The real body of the candle still holds the information of the open and close price of each candle. You'll hear the vertical lines coming off of the candles referred to as different things. They're known as the shadows, the tails, or the wicks of the candle. The information added by the shadows, tails, or wicks is the highest and the lowest price of the period. This means that price would have touched the very top and very bottom of the wicks as the candle was forming, before closing as you see them now. This is invaluable information for a trader, and I'll explain more about candle patterns and qualities in a future video. For now though, let's stick to the basics. This is a 5-minute forex chart of the US dollar Japanese yen. I've highlighted one of the bullish candles, and as you can see from the box, all of the information of the candle is provided for you. This was a candle that formed between 6 and 6:05 AM on the 16th of April 2015. You can see the opening price, the high of the candle, the low of the candle, and the closing price of the candle. You'll see one other type of candle on your charts, and they look like these. As you can see, these candles have little or no real body. They're known as doji candles. What a doji candle is telling you is that price opened and closed at the same or very near to the same price. This is known because there is little or no real body. So although the price may have moved quite significantly during the time period, it closed back on or very near to its opening price. And that is the basic foundation of reading a chart. If we reintroduce the chart from earlier, you'll see that all of the information present on the chart is simply based around price action. Here we can see some bullish candles, and the market pushes higher as price increases. Bearish candles show price decreasing, and so the market is falling. You can also see that the vast majority of the candles have shadows